Hello, everyone, and welcome back to another episode of Advisor Insider. I'm your host, Jeff Benjamin, Wealth Management Editor here at ETF.com. Today, we're fortunate enough to have a guest from Vanguard, Brent Beardsley, principal at the Vanguard Group, where he is head of Advisor Solutions in the Financial Advisor Services Division. Brent, how you doing today?
Good, Jeff. Happy to be here.
Yeah, thank you for being here. Tell us a little bit, first of all, we're going to get into what you do in the Advisor Services Division a little bit more later in the podcast, but just kind of introduce yourself to us, if you would.
Yeah, Jeff. So as you mentioned, I work at Vanguard. I lead a group called Advisor Solutions, and essentially that group provides a whole set of value-added services to third-party financial advisors to sort of help augment, sort of, and deepen the relationship that we have with advisors.
Mm-hmm.
Been at Vanguard about 6 years, which is relatively short in the Vanguard context. Before I joined Vanguard, I was at the Boston Consulting Group. So I was at BCG for over 17 years, where I led the asset and wealth management segment for BCG for a number of years.
Okay, good stuff. Sounds like you're the right person to be talking to about this stuff at Vanguard right now. We want to start with a little bit of a market economics perspective here, covering your kind of Vanguard's outlook for markets and how that drives your, I guess, a recent emphasis on fixed income, correct?
Yeah, that's right. Look, I think our economic forecast sees a lot of opportunity for in a very hospitable environment and backdrop for bonds in the longer term. So first off, starting yields have really improved the overall risk return trade-off in fixed income. Over the next decade, we expect returns, annualized returns for bonds, both in the U.S. and global ex-U.S., to be between 4.25 and 5.25, which is pretty healthy, and I think relative to equity, which we see probably a similar return with significantly more volatility. It's very attractive from a bond standpoint. And even though we see, some easing with central banks around the globe, our view is that policy rates will settle in at a much higher level than the 2010s, and set the foundation for a very solid fixed income and cash returns over the next decade.
Okay, cash returns. That's interesting. We've seen a lot of high cash returns over the past several years. What do you see financial advisors doing in terms of fixed income allocations these days? Are they taking heed to that kind of advice, or are they still chasing the, loading up on the equity side?
Yeah, I think, look, in general, we as Vanguard have long espoused, the benefits of a 60/40 portfolio, 60% stocks, 40% bonds. That's a very reasonable asset allocation from a long-term perspective.
Mm-hmm.
In general, I think when we look across a lot of advisor portfolios, they're much higher mixed towards stocks and equity. I think historically that's been the case, and that's not necessarily been a bad thing. That's just been the environment that they've been in. I think as we look going forward, there's an opportunity to shift more of that into fixed income to realize some of those benefits. I think a lot of advisors are taking a more nuanced and interesting view in fixed income because, look, I think up until a few years ago, rates were zero for a very, very long time. And now I think we're in an era that we call a sound money era where,
Mm-hmm.
rates are going to be real rates. And you're going to be thinking through as an advisor, how do you help your clients navigate duration, credit spread risk, et cetera. And I think that creates a much more nuanced conversation that advisors will have with their clients and therefore that we will have with advisors to think through how they play across different sectors. Uh, and we have a number of products to help them. And we're, have a pretty aggressive kind of campaign to launch a number of products over the next year or so to kind of help meet some of those needs that advisors are going to have to experience with their clients.
Okay, great. All right, it's the start of a new year. Most people are starting to think about or some people, I shouldn't say most people, a lot of people are starting to think about their taxes, filing their taxes, tax management. You guys have a new paper coming out on, I guess, tax loss harvesting, right? Normally I think of tax loss harvesting as kind of toward the end of the year, but is it never too early?
Well, that's correct. It's never too early. And yeah, the paper, we have a general advisors alpha framework that we've had for probably 20 plus years. And what we're doing this year for the first time is we're adding tax loss harvesting into that construct of advisors alpha. And the advisors alpha framework is essentially a framework that says, look, here's the things that you as an advisor can do to add value for your end investors.
Mm-hmm.
And it's a whole bunch of stuff we've always talked about in terms of asset allocation and and behavioral coaching and all those kind of things. And now we're adding tax loss harvesting to that. And it's never too early because, like, I think the opportunities to do tax loss harvesting exist throughout the entire year. And in fact, in a lot of ways, the increasing volatility in the market creates opportunities for you to take advantage of some price dislocations that can, sort of basically lock in some losses for you as you accumulate through the year. So
Hmm.
honestly, having that conversation at the very beginning of the year is actually really important, and you'll start to get a sense for where do I think this tax year is going to play out. I think the most sophisticated advisors work with their clients to think through almost like what's my tax budget, if you will, in terms of thinking through what are the gains that I might have in other parts of my portfolio, what are the opportunities to create some losses in some parts of the portfolio to help offset that. And so I think that is a conversation that, is appropriate at all times, now more than ever, because again, as you said, people are going through, it's the new year. I'm not thinking about my taxes yet, but I still have a few
Hmm.
months, but certainly many people are. And I think it's never too early to start that conversation.
Are there any things that you can think of that might be unique this year to tax loss harvesting?
Not this year in particular. I think we may see things in the future. Obviously, there's a lot of policy conversations that are happening with the new administration, et cetera, that may impact taxes, but none of that, I think, who knows how this will play out? Obviously, we don't know.
Hmm.
We don't have a crystal ball, but how that will play out through the course of this year, and even when there are changes, when those actually get implemented, it's unclear. I think the biggest thing is honestly, again, given some of the volatility we've seen in equity markets, it does create some opportunities now to think through where those opportunities. And we've got a direct indexing offer, Vanguard personalized indexing, which does allow you to look at on a daily basis, monitoring opportunities where there's tax loss harvesting
Hmm.
opportunities. And that, again, most of those occur when there's a lot of volatility in the market.
Okay, I was going to ask you about direct indexing next, but first I want to ask about the status of this research paper and where can people go to find it?
Yeah, it's coming soon. Obviously, it'll be available on our website. It's coming soon. We're in the final stages of finalizing it, but it again, one of the things we've done with our Advisors Alpha framework is try to put a bit of hey, what are the real benefits here? I can talk to you as we
Hmm.
have on this, the qualitative benefits, and I think what we want to do is try to quantify some of the benefits that we see that it can provide. And again, in many ways, look, we as Vanguard, we believe in advice, and advisors add a ton of value, and this is honestly a way for advisors to demonstrate their value well in excess of whatever they might charge their clients.
Okay, all right. Direct indexing. Okay, I
Yeah.
I want to ask you about the benefits of it, what you see there at Vanguard. I got to tell you, I've been hearing about direct indexing for a long time. I don't hear a lot of financial advisors getting super excited about it. Frankly, it sounds like a product looking for a home, and I know that's probably gonna, you know, get you a little bit fired up at me. Maybe not. But I want you to sell it to me, okay? I
Yeah.
mean, tell me why. We're not talking about selling me a Vanguard product, but sell me the
Yep.
concept of direct
Yep.
indexing, or two financial advisors essentially in the
Yeah.
audience.
Well, first off, and you said this, like tax loss harvesting and direct indexing, frankly, it's not new. I mean,
Hmm.
companies have been doing this for north of 20 years. I think what's happened in the last probably 3, 4 years is technology has enabled the practice to become more scalable, more cost effective, and more accessible. And so like the size of the portfolio, if you will, that where this makes sense has come down, right? And so it makes it more accessible to everybody. And effectively, the way it works is, you would set up much like you would buy an ETF with a given benchmark, S&P 500 or total stock market, et cetera. And instead of buying the fund, you would purchase a basket of individual securities. And what we do on a daily basis is assess where there's opportunities across that basket of individual securities to harvest some losses. And we do that within the context of making sure that the tracking error and the performance of the overall portfolio closely mimics the fund, right? Because in almost every single fund, there's thousands of securities, and not every single one of those securities will drive the overall value. You can actually not have some of those securities for 30, 60, 90 days or whatever, and you'll still get a performance that's relatively close to the overall performance of the index that you're trying to track. But the benefit you'll get is you actually will accumulate these losses throughout the course of the year while you're still getting the returns of the index. That will then offset gains that you have somewhere else in your portfolio, or you're taking just losses on your tax returns. So that's the benefit of it. And look, I think for us, it is priced slightly higher than an ETF. I mean, it's hard to price anything as low as an ETF, to be honest.
Hmm.
But it's not that expensive, and the tax benefits that you can get are well in excess of the cost the higher cost that you might incur from this.
Okay. Now, is direct indexing most or best suited for high net worth or wealthier investors?
Maybe best is the right word. I don't think it's just for that though. Look, anybody who's got some gains in their portfolio would benefit from this. But yes, I think what we see is advisors that look. There are some advisors we work with that their default for the U.S. domestic equity portion of the portfolio is a direct indexing solution. They don't even use ETFs. In many cases, it's paired really well with you've got a private equity investment or some other alternatives investment or investment that's spitting off capital gains on a regular basis. It's a fantastic solution, but that's not the only solution. Having said that, look, it's not for everybody, right? I mean, and again, our with Vanguard, we work with our advisors. Our minimums are $250,000. That's just in that account, and so you need to have sizable, but it's certainly not
Right.
only for high net worth or ultra high net worth, but that's where we see the most usage.
Are there advantages to direct indexing beyond the tax advantages?
Certainly. Certainly there's an ESG orientation to this, right? So your ability, and again, we've got a really nice customizable user interface that allows you to select different things that you want to do. You maybe want to screen out some coal companies, or you want to overweight sort of women women of high interest on boards, as an example, or a high representation on boards. So you can do all those kind of things to do some tilts or screens on individual securities within the solution. So there's an ESG piece. The other piece, honestly, is you can do focus around concentrated positions. So again, this is see a lot of people will come in, especially if they're an executive, they will have large stock holdings at individual security. And so they want to construct a portfolio around that because they're already, let's say they're a Google executive, right? They're already pretty overexposed to technology. And so they want to build a portfolio that takes that into account. And that's the other big application.
Okay. And again, a $250,000 minimum at Vanguard, right?
Yeah, through an advisor. Like all of our offers is through third-party financial advisors. But yeah, 250 is the minimum. Yep.
All right. Now let's talk about I want to wrap up the conversation here with a little bit of a discussion about the wealth management division where changes appear to be afoot. In December, Vanguard brought on Joanna Rotenberg, I hope I'm pronouncing that correctly, to lead the division, which is apparently set for expansion, as I understand it. But for some context, this is not new. The division has been around since 2015 and has about 300 billion under, I guess, advisement or management, however you want to count that. So it's not a new venture at Vanguard, but give us an update, Brent, if you will, from your perspective on where Vanguard is going with this wealth management division.
Yeah, well, to your point, it's not new. I mean, like it's a new organization, if you will, but it's really created to support our existing wealth management and advice offers within Vanguard, which are really all designed to appeal to our current Vanguard clients, right, who are looking for more guidance, in investing. We have been offering, I mean, essentially you mentioned 2015, but actually we've been offering advice and perspective since 1996, actually. We've been doing this for a very long time. And, I think this recent announcement just reflects how we're evolving our organization structure to sharpen our alignment on those clients, to your point, given the size of the business and the number of clients that we have, to meet their evolving needs for those individual investors. And so a lot of that is really to maintain that focus on that existing client and that existing set of business. And it is mostly focused on existing clients. I will also tell you, by the way, that like my group, which, does work with third-party financial advisors, I leverage a lot of the work and the insights that we do for our own advice clients. So my group we have an offer called financial planning and behavioral coaching, and we offer thought leadership. We also have tools, we have like a Roth conversion estimator. We have a healthcare estimator. Those are the exact same things that we do for our own internal clients. We offer that to our third-party advisors because look, we care about helping advisors serve their clients. And we think those are great tools to help them serve their end investors. So none of that changes, even though we're sort of creating this new organization. Like the ability for my group, who serves third-party advisors, to leverage that thought leadership, those tools, all of those perspectives that we do for our own clients, we completely bring those to third-party advisors as well.
Yeah, I'd be interested to know what the advisors that you work with think about Vanguard's wealth management division.
Well, the way I would see it is this, right? Like advice is not a one size fits all proposition. There are a lot of clients who are looking for different things, and it's a huge market. you know? And
Mm-hmm.
so like I think I would look at it again. I worked outside of Vanguard for a long time. It's a big market and a lot of people provide services across many places that many clients they work with and may in some places kind of a co-opetition kind of framing. And so, to me, like I think we track this honestly in terms of our clients that we work with and how they feel about, sort of Vanguard entering advice, et cetera. We've really lowered the barriers to that perception. And again, part of this, as I just talked about, is bringing our insights and thought leadership that we do for our own advised clients to third party advisors. We're
Mm-hmm.
here to help end investors. Like that's our mission. That's Vanguard's sort of reason for existing. And whether that's through our own advice clients or through a third party advice client, that's totally fine. Clients are going to choose what they want to do. And some of them will want a human advisor that they meet in person. Some of
Mm-hmm.
them will want a digital platform. That's great. Like we're here to help all clients.
Mm-hmm. Well, as I understand it, those are the levels that Vanguard is building out, or maybe already has, but is going to continue to expand on with their internal wealth management division. And does it feel like the wealth management division is going to be more and more competing with the kind of people that you're working with, these outside advisors, Brent?
I personally don't see it that way. If anything, I'm excited because this division, what it'll do is it'll help build capabilities to serve our own advice clients that I can then
Mm-hmm.
leverage and use for third party advisors.
Mm-hmm.
Right. So to me, this is just an expansion of the capabilities that my group, can help deliver to third party advisors to help them all succeed. Because then look, in many ways, I think a lot of the financial planning stuff, and again, I love this phrase, like when you do asset management and you want to pick one fund or another, it's kind of a zero sum game. It's like, do you perform better? Other people have to perform worse. When it comes to financial planning and a lot of the benefits, that's a positive sum game. Like everybody benefits from better financial planning. Everybody benefits from better behavioral
Mm-hmm.
coaching. Everybody benefits from this. So this is not about like, oh, my client wins, you lose. It's like everybody benefits from all of these things. And so that
Mm-hmm.
to me is how I think about the benefits here.
Well, it does sound like there's a lot of sharing of or crossover of resources and as you said, access to the information that you guys have out there and the research and the tools. But does it feel, Brent, like you're in a position of helping financial advisors to better compete with Vanguard's internal wealth management division?
I don't look at it as competing, to be honest. I
Mm-hmm.
look clients are going to pick where they're going to go, and I think we're helping them in all
Mm-hmm.
stages. So I don't look at it as competing in any way. I like it's a huge market. There's a lot of business out there. I don't think it's competing.
Okay. Really good, candid conversation. Appreciate that, Brent. I want to thank Brent Beardsley, principal at the Vanguard Group, where he is head of Advisor Solutions in the Financial Advisor Services Division. Really good stuff. My name is Jeff Benjamin, again, Wealth Management Editor here at ETF.com. Reach out to me directly at jeff.benjamin@etf.com. We're always looking for feedback. We're always looking for new ideas to discuss here on the podcast, and we're always looking for new guests, more guests. Appreciate Vanguard coming on and helping us out today. And also, I want to direct you to ETF.com's Advisor Center, where we have all the research and tools that I hope you need to help build portfolios for your clients. And if you don't see something you wish was there, you don't see everything you need, let us know about that too. All right. Thank you, folks. Thank you, Brent.